All right, so let's dive into these fintech reports you sent over.
Okay.
Looks like we're trying to figure out what happened in fintech during 2024.
Yeah.
Especially when it comes to funding and exits.
Yeah, that's right.
And, well, it seems like it was quite a year.
Yeah, a real roller coaster.
So buckle up, everybody.
What's interesting is this contrast we're seeing.
Okay.
A dip in fintech funding overall.
Uh-huh.
But the deals themselves are getting bigger.
Right.
Like investors are shifting gears a little bit and pouring their resources into companies that are more mature. You know, the ones that have already proven themselves.
Yeah.
Especially with all this global economic uncertainty and the constant regulatory changes.
Right.
It paints a very fascinating picture.
So the CB Insights Report shows a 20% drop in global fintech funding.
Wow.
A total of $33.7 billion for 2024.
Okay.
And there's also a 17% drop in the number of deals.
Yeah.
Down to 3,580.
Fewer deals. So less money overall.
Does this mean the fintech frenzy is finally cooling down?
What?
Is the party over?
It's not quite so simple.
Yeah.
The numbers are down.
Yeah.
But it's actually the smallest decline we've seen in the last 3 years.
Okay.
And get this.
Okay.
In the last quarter of 2024, funding actually bounced back.
Oh, wow.
By 11%, reaching $8.5 billion.
Ah.
So it may be less of a shutdown and more of a correction.
Okay.
Maybe the party isn't over.
Uh-huh.
Just a bit more exclusive.
Fewer guests, but maybe they're bringing bigger gifts.
That's right.
Because the report mentions a jump in deal sizes.
Yeah. The median deal size jumped by 33% in 2024.
Wow.
Hitting $4 million.
So investors are placing larger bets on companies with serious growth potential.
Exactly.
But they're less interested in those risky early-stage ventures.
Elite.
And more focused on proven solutions that can scale.
Yeah, that's a great way to put it.
Less spray and pray.
Yeah.
And more aim and fire.
Exactly.
And this move towards bigger deals is even more pronounced in some areas.
It is.
Especially banking.
Yeah.
What does the report say about that?
Well, in banking, the median deal size shot up by 70% in 2024.
Wow.
Hitting $8.5 million.
So investors are getting skittish about new banking technology.
Yeah, especially with all the regulatory uncertainty.
And they want the comfort of established players.
Yeah, they want to stick with what they know.
Right. Makes sense.
Yeah.
But speaking of shifting strategies,
Sure.
The report also found a jump in what's called M&A exits.
Yes.
Now, for those of us who aren't finance whizzes,
Uh-huh.
can you explain what that means?
Of course. M&A stands for mergers and acquisitions.
Okay.
Basically, it means companies are combining forces.
Okay.
Thereby merging together or one buying out the other.
Right.
In fintech, we saw a 24% jump in these M&A exits.
Wow.
In the last quarter of 2024 alone, for a total of 189 exits.
And the biggest one was?
The biggest one was Stripe buying the stablecoin platform Bridge. Okay.
For $1.1 billion.
$1.1 billion.
That's a lot of digital cash.
It's a lot of anything.
It is.
So what's driving all these companies to join forces?
Well, it seems like those bigger companies are looking to diversify what they offer.
Okay.
And build these one-stop shop platforms.
Right.
They're snapping up smaller fintech companies to fill in the gaps.
Okay.
And create a more comprehensive suite of services.
Like building a financial services Voltron.
That's a great analogy.
Combining all those different fintech powers into one super-powered entity.
I like it.
Is this happening all over the place?
Well,
or are there some hot spots for this kind of activity?
All 5 of the largest M&A deals in Q4 were U.S.-based companies.
Interesting.
Which really shows the strength of the American fintech market.
So the U.S. is still the king of the fintech castle.
At least for now.
But even with all this M&A action,
right,
some sectors are still hotter than others when it comes to attracting investment.
The report shows that payments technology is still a big draw.
It is. Payments are huge.
So 5 out of the top 10 equity deals in the last quarter went to companies focused on payment solutions.
Wow.
All sorts of things, from mobile apps to cross-border tools to platforms that digitize B2B payments.
Yeah.
So what does equity deal mean?
It's pretty simple.
Okay.
It's when a company raises money by selling shares in their business.
Okay.
Or ownership.
So all these big equity deals in payments, tech.
Right.
Tell us there's a big push to make commerce more digital.
Yeah. make those transactions easier for everybody.
Whether they're buying groceries or managing a business.
Exactly.
Payments are the backbone of commerce.
They are.
So it's no surprise that investors are so eager to be part of that evolution.
Yeah, they want in on the ground floor.
Speaking of global trends, the report also breaks down how funding and deals are distributed around the world. Were there any big surprises?
Well, in the fourth quarter of 2024, the U.S. led with $3.9 billion in funding across 293 deals. Europe was second with $1.9 billion across 179 deals.
All right.
And Asia had $1.1 billion and 178 deals.
So the U.S. is holding on to its top spot.
Yeah.
But was anyone else making a move on the leaderboard?
Well, one region that's really turning heads is Latin America.
Interesting.
They haven't historically seen the same level of investment, but in that last quarter of 2024, they attracted $1.1 billion across 45 deals.
That's a huge jump.
It is.
It shows how Latin America is becoming a real hub for fintech innovation.
And investment.
Yeah, it seems like the fintech landscape is becoming more global.
Yeah, new players are popping up everywhere.
Along with geography, the stage of a company's development also seems to be a big factor.
It is.
In attracting investment.
Yeah, are those early stage startups having a tougher time?
Yeah, are they getting funded compared to the more established players?
Well, we're seeing a real shift towards mid and late stage deals. While early stage ventures are getting a smaller piece of the pie.
Interesting.
This is especially true in banking, where 38% of all deals in 2024 were mid or late stage.
Wow.
Which is a huge jump. 17 percentage points up from last year.
So investors are playing it safe.
It seems that way.
Betting on companies with proven track records.
Yeah, less risk.
Rather than taking those early stage gambles.
Right.
And this preference for more mature companies is probably impacting those new fintech unicorns.
Yeah.
So can you remind us what a unicorn is in this context?
So in the financial world, a unicorn is a privately held startup valued at over $1 billion.
Okay.
Think of it as a rare mythical creature in the business world.
So the emergence of these new fintech unicorns has definitely slowed down.
It has.
In that last quarter of 2024.
Yeah.
Only 2 new unicorns were born, bringing the total to 326 globally.
Okay.
Quite a contrast to previous years.
Yeah, when they were popping up left and right.
But even with fewer new unicorns,
there
are still some interesting developments.
There are.
The report highlights one particular unicorn birth.
Yeah.
A company from Nigeria called MoneyPoint.
Yeah, MoneyPoint reaching unicorn status is very significant.
How so?
Well, first, it shows that fintech innovation and investment are really taking root in Africa.
That's exciting.
It is.
To see those new markets emerging.
Yeah.
So second,
despite that overall funding slowdown, MoneyPoint's success shows that impactful fintech solutions can emerge from anywhere in the world.
It's a global phenomenon.
It is.
Not just the usual tech hubs.
That's right.
So MoneyPoint's story is definitely a bright spot.
Yeah, a real success story.
In an otherwise somewhat subdued landscape.
Yeah.
For new unicorns.
Yeah, it shows that innovation can thrive even in those markets that haven't traditionally been on the radar of those major investors.
So the shift towards larger deals and a focus on proven solutions. What does it mean for the future of fintech innovation?
That's the big question.
Yeah. Is this a sign that things are about to get less exciting?
Well, on one hand, this consolidation with big companies getting bigger and investors playing it safe could stifle innovation. If they're only backing those companies that already have those solutions, it might leave less room for those disruptive, groundbreaking ideas to take root and grow.
So if everyone's looking for the sure bet, will that discourage those bold, outside-the-box thinkers?
That's a valid concern.
The ones who often drive those big breakthroughs.
Yeah, it's a delicate balance.
But there's another side to this.
There is.
This trend of consolidation. Right?
It could also lead to a new era of fintech companies that are more robust and more impactful.
How so?
Well, by combining resources and expertise through these mergers and acquisitions, these larger players might have the muscle to develop and scale solutions that can tackle some of the biggest challenges in financial services.
So it's not necessarily a bad thing.
It might not be.
For the fintech ecosystem to mature and consolidate.
That's right.
It could lead to more sophisticated, and sustainable solutions.
More robust solutions.
In the long run.
Exactly.
But it'll be fascinating to see
it will be
how this balancing act plays out.
Yeah. How does this balance between consolidation and innovation work out? It'll be really interesting to see.
Absolutely.
And that brings us to another important aspect.
Okay.
The geographic distribution of funding.
Right.
We've already talked about how the U.S. is still dominant, but other regions are gaining ground.
Yeah, and understanding these regional dynamics
it's crucial.
Is really essential for anybody looking to invest in or work for.
Yeah, or even just to keep up with the evolution of fintech.
So let's take a closer look at the key players.
Sounds good.
On the global fintech stage, starting with the U.S.
Okay.
What's the current state of play?
Well, the U.S. is still the powerhouse. No doubt about it.
Yeah.
In 2024, it attracted $16.5 billion in funding.
Wow.
Across 1,428 deals.
That's a lot of zeros.
It is a lot of money.
So what's driving this continued dominance?
Well, it's a few things.
Okay.
First, the U.S. has a massive financial services industry, which is a really solid foundation for fintech innovation.
Okay.
Second, the regulatory environment here is generally supportive of fintech, which really encourages those companies to experiment and grow.
Makes sense.
And third, there's a deep pool of venture capital here that's willing to bet on those promising startups, providing fuel for the fire.
Right.
Plus, a lot of those leading tech companies are based here, which creates a really vibrant ecosystem.
It's the perfect storm for fintech to flourish.
A robust financial system, a welcoming regulatory landscape, a thriving tech scene.
And this dominance is really reflected in the sheer number of high-profile companies.
It is.
They call the U.S. home.
Yeah, we've got the established giants like Stripe.
Right.
Chime, Plaid,
yeah,
and then all those rapidly growing startups, like Splitter Row and Current.
It's an impressive lineup for sure.
It is.
But while the U.S. is clearly a major player, we can't ignore the growing influence of other regions.
No.
Europe, for example,
yeah,
seems to be making strides.
Big strides.
In the fintech space.
It is.
So what's driving that growth across the pond?
So Europe is emerging as a real force in fintech.
Okay.
No doubt about it.
Right.
They attracted $7.9 billion in funding in 2024 across 780 deals.
So the U.S. is still ahead in terms of funding, but Europe is catching up.
Yeah, they're gaining ground.
What are some of the trends and factors driving Europe's fintech surge?
Yeah, okay.
Are they just following the U.S. model?
Europe has a really long and rich history of financial innovation, going all the way back to the early days of banking and trade.
Okay.
And that legacy is a big part of their current fintech boom.
Okay.
Plus, in recent years, European governments have been very active in promoting fintech development.
So they're creating those regulatory sandboxes.
They are.
So companies can test out those new ideas without all those regulatory hurdles.
It makes it easier for them.
And they're launching initiatives.
They are.
To foster innovation.
Lots of support.
It sounds like there's a real push.
There is.
From those European governments. To embrace and support fintech. And it seems like that's paying off.
It is.
Attracting serious investment. And fostering a real, vibrant fintech ecosystem.
It's a great place to be.
What kind of companies are leading the charge over there?
We're seeing a wave of these really exciting fintech companies all over Europe.
Like what?
From neobanks like Revolut and N26.
Okay.
To those digital lending platforms like Zopa and Funding Circle.
And many of these companies are expanding beyond their national borders.
They are.
Serving customers across the EU and beyond.
Yeah, taking advantage of that single market. To scale their operations and reach a wider audience.
It's exciting to see.
It is.
How they're taking advantage of that integrated market.
The EU's integrated market is a great place to be.
To expand their reach.
Yeah.
But the fintech landscape is always shifting.
It's constantly changing.
And new contenders are popping up.
All the time.
One region that's really caught my attention is Asia.
Yeah.
It seems to be rapidly becoming a major force.
Asia's on fire.
In fintech.
It is.
What's fueling that boom?
So Asia's a real hotbed of fintech activity. Okay. In 2024, it attracted $5.3 billion in funding across 729 deals.
So what are the key factors?
Well, the massive population is definitely a factor.
Right. Billions of people.
Right.
Many of whom are underserved.
Yeah, understood.
By those traditional financial institutions.
Yeah.
So that creates a huge potential market.
A huge market.
For those fintech companies offering alternative solutions.
Exactly.
So if you're a young person.
Yeah.
In a rural village. In Southeast Asia.
Yeah.
You might not have easy access to a bank branch.
That's right.
But you probably have a smartphone.
That's where fintech comes in.
Yeah, providing those services.
Exactly.
Through mobile apps and online platforms.
Right.
It's a vast untapped market.
It is.
It's ripe for disruption.
Ripe for disruption.
And it seems like those Asian consumers are really receptive.
They are.
To those new technologies and digital services.
Yeah, they're embracing the digital world in a big way.
Yeah, they're ahead of the curve in a lot of ways.
They are.
So that creates fertile ground for fintech to flourish.
Mobile penetration and internet usage are extremely high in a lot of Asian countries.
Okay.
It's the perfect environment for these fintech companies.
Right, to reach customers and deliver those innovative services.
Yeah, and governments across Asia are recognizing the potential of fintech to drive economic growth. And financial inclusion. Leading
to supportive policies and regulations.
That's right.
So it's a combination of a massive market, tech-savvy consumers, and government support.
A lot of support.
No wonder Asia's becoming a fintech powerhouse.
And that's reflected in that wide range of companies that are popping up.
From mobile payments, giants like Alipay and WeChat Pay.
Yeah, in China.
To those digital lending platforms.
Right.
Like Grab Financial.
Yeah, and Southeast Asia.
Asia is home to a really diverse and rapidly growing fintech ecosystem.
Yeah, a region to watch for sure.
It's an exciting time.
It is.
To be following the evolution of fintech in Asia.
Absolutely.
But while we've been focusing on these major players, the U.S., Europe, and Asia, it's important to remember that fintech innovation is happening all over the world.
It is. It's a global phenomenon.
What are you seeing in other regions?
Well, we're seeing a real surge in fintech activity in Latin America, Africa, and even Oceania.
Wow.
With companies developing solutions tailored to their local markets.
So this global spread of fintech innovation.
It's really one of the most exciting things about this industry.
Yeah, it's not just a Western phenomenon anymore.
It's a global movement.
It really is a global phenomenon.
It is.
And it highlights the power of fintech to address some of the challenges facing people and businesses all around the world.
Regardless of where they are or their economic status.
It's about democratizing access to financial services and empowering people. To take control of their financial lives.
I couldn't agree more.
Absolutely.
It's about using technology to create a more inclusive and equitable financial system for everyone.
But let's shift our focus now.
Okay.
From the geography of fintech to those specific sectors within this vast landscape that are attracting the most attention from investors. Which areas are seeing the most action?
Well, one sector that continues to be a magnet for investment is payments. In 2024, payments companies raised a total of $6.7 billion. Which shows that investor interest in streamlining those financial transactions.
It's all about making it easier, faster, and more secure for people and businesses to move money around the world.
That's right.
Payments are the lifeblood of commerce. So it makes sense that investors are eager to back those companies.
They are.
Innovating in this space.
Yeah, they want to be a part of that.
What are some of the key trends and drivers behind this? Sustained interest in payments tech. What's got investors so excited?
Well, the ongoing digitization of commerce is a big factor.
Right. As more transactions move online and onto mobile devices. The demand for those seamless and secure payment solutions.
It keeps growing.
It just keeps growing.
We're seeing so much innovation in mobile wallets, contactless payments, cross-border payments.
All aimed at making it easier for people and businesses to move money around.
Yeah, more efficient.
It seems like the payments landscape is constantly evolving with new solutions emerging all the time. And this rapid pace of innovation is attracting all sorts of investors.
It is.
From venture capitalists betting on the next big thing to large financial institutions.
Yeah, they all want a piece of the action.
And that confidence is reflected in the success of many payment companies.
It is.
some of which have reached those remarkable valuations.
Yeah, like Stripe.
Yeah, Stripe.
A global payment processing platform.
Valued at over $70 billion.
Yeah, one of the most valuable private companies in the world.
It's a testament to the power
It is.
of payments technology
Yeah.
to transform the financial services industry.
Absolutely.
Stripe's success is definitely inspiring.
It is.
And it's just one example
Yeah.
of the many innovative payment companies out there that are attracting
so much attention from investors.
Payments technology is a major force
It is.
in the fintech world.
Yeah.
And it shows no signs of slowing down.
No signs of slowing down.
But let's move on
Okay.
to another sector
All right.
that is attracting increasing investment.
Sounds good.
Banking. In 2024, banking companies raised $3.8 billion,
Wow.
signaling a growing interest
Yeah.
in those companies developing innovative banking solutions.
So what's driving that surge?
Well, the banking sector
Yeah.
is ripe for disruption.
It is.
Traditional banks
Yeah.
often face criticism
They do.
for high fees,
Yeah.
slow processes,
Right.
lack of transparency.
Uh-huh.
And this has created an opportunity for fintech companies
Yeah.
to step in
offer alternative solutions.
and offer those solutions that are more customer-friendly,
Yeah.
more efficient,
Need this.
more transparent.
Right.
It's like that traditional banking model
Yeah.
is being challenged
It is.
from all sides
From all sides.
by those agile and innovative fintech startups.
Right.
They're moving fast,
Yeah.
breaking things,
Mm-hmm.
and offering customers
Yeah.
a refreshing alternative
Yeah. They're shaking things up.
to the old way of doing things.
Exactly.
We're seeing the rise of neobanks,
We are.
which are those digital-only banks
Right.
that offer a wide range of services
They do.
through those mobile apps
Uh-huh.
and online platforms.
Right.
And these neobanks are attracting customers,
They are.
especially younger generations,
The younger generations love them.
who are very comfortable with digital banking
Yeah.
and appreciate that convenience
So convenience
and transparency
Uh-huh.
that neobanks offer.
They're not tied down by those legacy systems and branches, so they can adapt more quickly to those changing needs.
Neobanks are definitely shaking things up.
They are.
But it's not just about consumer banking.
Yeah.
Fintech companies are also innovating
Yes.
in business banking
Uh-huh.
and lending.
Right. What's happening there?
What's happening on that front?
Well, we're seeing companies developing platforms that make it easier for businesses to access loans,
Right.
manage their finances,
The other
and process payments.
And these solutions are particularly appealing to those small and medium-sized businesses
The SMBs.
who often struggle
Yeah.
to get those affordable and efficient financial services
Yeah.
from traditional banks.
Right.
So fintech is leveling the playing field,
It is.
giving those smaller businesses the tools they need
Yeah.
to compete and thrive.
Yeah. Giving them a fighting chance.
So it's about empowering businesses
It is.
with the tools that they need
You know?
to succeed.
To succeed. It is about empowering businesses.
And this focus on serving those businesses
Yeah.
is a trend we're seeing
Yeah, we're seeing it
across the fintech landscape.
across the board.
It's not just about disrupting consumer finance anymore.
It's bigger than that.
It's about transforming
Yeah.
how businesses operate
How they operate.
and interact with the financial world.
Yeah, they're recognizing that businesses represent a huge market, a huge, largely untapped market.
And they're developing those solutions that are tailored
That's right.
to the specific needs
Yeah, the specific needs.
of different industries.
Different industries.
Right.
Different business models.
They're not trying to be everything to everyone.
No.
They're focused on solving those specific problems
Right.
for those specific businesses.
That's the key.
And that's what makes them so successful.
Yeah, focus is key.
So the fintech industry is coming of age,
It is.
moving beyond that initial focus
Yeah.
on consumer-facing solutions
Right.
to address the complex needs of the business world.
Exactly. It's becoming more sophisticated, more specialized,
More impactful.
more impactful.
And this shift towards serving those businesses is likely to continue
It is.
as those fintech companies
Yes.
seek new avenues
New avenues for growth. New avenues for innovation.
for growth and innovation.
That's right.
The business world
Yeah.
is a vast and complex ecosystem.
It's huge.
And there are so many opportunities for fintech companies.
So many opportunities to make a real difference.
It's an exciting time to be following this evolution.
Absolutely.
But let's move on now
Okay.
to another sector
Right.
that is attracting increasing investment.
That sounds good.
Digital lending.
Digital lending.
In 2024, digital lending companies raised $4.9 billion in funding.
Wow.
Highlighting that growing demand for those alternative lending solutions.
So what's driving this growth?
Well, those digital lending platforms have become super popular in recent years.
Yeah, they have.
Offering consumers and businesses an alternative to those traditional bank loans.
An alternative to those traditional bank loans.
And one of the key factors driving this growth is the ease and speed of that application process.
Yeah, those digital lending platforms use automated systems to assess creditworthiness and approve loans.
Making the process so much faster.
So much faster.
Than those traditional bank loans.
More efficient, too.
So that digital lending experience is designed to be as frictionless as possible.
As frictionless as possible.
Appealing to those borrowers who value speed and convenience.
That's right.
No more mountains of paperwork.
No more paperwork.
No more weeks of waiting for an answer.
Exactly.
And another factor driving this is the availability of those alternative data sources.
Right. So digital lending platforms use data beyond those traditional credit scores.
Right.
Things like social media activity or online purchase history.
To assess creditworthiness.
To assess creditworthiness, exactly.
So this can help those borrowers.
It can.
Who maybe don't have a strong credit history.
Yeah.
But they can demonstrate their financial responsibility through other means.
That's a mean.
It's about giving people a chance.
Exactly.
Even if they don't fit that traditional lending mold.
That's right.
So those digital lending platforms are using technology to open up access to credit for a wider range of borrowers.
That's the goal.
And this focus on financial inclusion is another trend.
A big trend.
We're seeing
across the board.
Across the fintech landscape.
That's right.
Making financial services more accessible.
More accessible.
More affordable.
More affordable.
For everyone.
For everyone.
Regardless of their background or circumstances.
Exactly.
It's inspiring.
It is.
To see how fintech companies are using their ingenuity to create a more inclusive financial system.
To make a difference.
But let's move on to another sector.
Okay.
That's attracting significant investment.
Sounds good.
Wealth tech.
Wealth tech.
In 2024, wealth tech companies raised $3.1 billion in funding.
Wow.
Showing a growing interest.
Yeah.
In those companies developing solutions that help people manage and grow their wealth.
What's driving that?
Well, the wealth management industry is ripe for disruption.
It's been the same way for too long.
Traditionally, those wealth management services have been reserved
for the wealthy.
For the wealthy.
Yeah, with those high fees and those minimum investment requirements.
So those fintech companies are challenging the status quo.
They are.
By offering more affordable and accessible wealth management solutions.
That's right, to a wider range of individuals.
Yeah, they're democratizing.
Democratizing wealth management.
Wealth management. Making it available to everybody.
To everyone.
Not just a privileged few.
Exactly.
It's bringing those tools of wealth creation to the masses.
That's right.
We're seeing the rise of robo-advisors.
We are.
Which are those automated platforms that use algorithms
to create
and manage those investment portfolios.
Based on an individual's risk tolerance.
And financial goals.
That's right.
And robo-advisors are often significantly cheaper than those traditional financial advisors.
Yeah, so much cheaper.
Making them a good option.
Yeah, a great option.
For those who are just starting out.
Yeah, just starting to invest.
Or who have limited assets.
Yeah.
They're taking the guesswork out of investing.
Taking the guesswork out.
Making it more accessible.
To everyone.
Robo-advisors are shaking things up.
They are shaking things up.
But it's not just about automated investing.
No, it's not.
Those fintech companies are also innovating in financial planning and education.
So what are they doing there?
What are they doing in those areas?
Oh, we're seeing companies developing tools that help people track their spending, create budgets, and plan for retirement.
So they're empowering those individuals to take control of their finances and make informed decisions.
They can form decisions
about their future.
That's right.
So they're taking the mystery out of personal finance.
Out of personal finance.
Yeah. Giving those people the knowledge and tools they need.
The tools they need.
To achieve their financial goals.
Exactly.
It's like putting the power of financial planning back into the hands of individuals. And this focus on empowering consumers is something we're seeing.
The big trend.
All across.
All across.
The fintech landscape.
That's right.
Giving people more control, more choices.
More opportunities.
More opportunities to build a better financial future.
Yeah.
But let's move on.
Okay.
To the next sector.
Sounds good.
Insurtech. In 2024.
Okay.
Insurtech companies raised $4.5 billion.
Yeah.
Highlighting that growing interest in those companies developing innovative insurance solutions.
So what's driving that growth?
Well, the insurance industry.
Is
another one that's ripe for disruption. Those traditional companies.
Yeah, those traditional insurance companies.
Often face criticism.
They do.
For their complex policies.
Right.
Slow claims processes.
Yeah, those high premiums.
So the fintech companies are stepping in to address these pain points.
Yeah. They want to offer more transparent, customer-centric and
data-driven insurance solutions.
They want to make insurance easier to understand, easier to buy, easier to use.
It's like the insurtech industry trying to take the headache out of insurance.
That's right.
No more deciphering.
Yeah. No more deciphering.
Those complicated policies.
There's more paperwork.
We're battling with that endless paperwork.
Exactly.
So we're seeing the rise of those digital insurance platforms that allow consumers to buy those policies online.
Yeah.
File those claims digitally. And track their coverage in real time.
That's right.
They're streamlining that whole experience.
They're streamlining the experience, making it more convenient.
Putting the customer in control. And giving them a seamless experience?
Exactly.
Those digital insurance platforms are definitely changing the way people buy and manage insurance.
That's right.
But it's not just about simplifying that customer experience.
It's not.
Fintech companies are also using data and analytics to develop more personalized and affordable products.
How do they do that?
How does that work?
Well, by leveraging data from sources like wearable devices and telematics, Insurtech companies can assess risk more accurately and offer those customized premiums based on an individual's behavior
and lifestyle. And that can lead to lower premiums.
It can.
For those safe and responsible individuals.
Yeah.
It's about making insurance fairer.
Fair.
And more equitable. So it's about rewarding.
It is.
Good behavior. Making insurance more fair. And equitable. And this focus on data-driven personalization is a trend we're seeing.
Yeah, we're seeing it everywhere.
All across the fintech landscape.
Yeah, all across the fintech landscape.
Using data
to
create products and services that are tailored to individual needs and preferences.
That's right.
It's exciting.
It is.
To see how data and technology are transforming the insurance industry. But let's move on to our final sector for today.
Okay.
Capital markets tech. In 2024, capital markets tech companies raised $1.9 billion in funding.
Okay.
Signaling a growing interest in companies developing solutions that improve the efficiency and transparency of capital markets.
So what is capital markets tech?
What is it?
And why is it attracting so much attention?
Yeah, why is it so hot?
Well, the capital markets industry is traditionally very opaque and complex.
Okay.
Lots of manual processes, lots of intermediaries. It's often shrouded in secrecy and complexity, which can make it hard for ordinary investors to participate. But fintech companies are working to streamline those processes and make capital markets more accessible.
More accessible.
To a wider range of participants.
So they're bringing transparency and efficiency to a sector that's long been dominated.
Yeah, for too long.
By those big institutions.
The big institutions and the insiders.
So they're bringing those capital markets into the digital age.
Exactly.
Making them more accessible and understandable for everyone.
That's the goal.
We're seeing the rise of platforms that allow individuals to invest in alternative assets.
Like real estate. Private equity. They were previously only available to those institutional investors.
So those platforms are democratizing access. To those investment opportunities.
Yes.
Making it easier for individuals. To diversify their portfolios.
That's right.
Giving them a chance. To participate in those markets. That were once off limits.
Off limits.
So fintech is breaking down those barriers.
Breaking down barriers.
In investment world.
Right.
Making it possible
Yeah.
for more people.
More people.
To participate. In those capital markets.
And that's a good thing.
More people investing.
More opportunities.
More opportunities for growth.
A more vibrant economy.
And we're also seeing companies
that
are developing those solutions that improve that efficiency and transparency of those trading and settlement processes.
Exactly.
They're reducing costs. Speeding up transactions. And minimizing risk. For market participants.
Making the whole system work better.
So it's about making those capital markets more efficient. And accessible. For everyone involved. Capital markets tech is definitely a sector to watch.
It is.
With the potential to transform the way we invest and raise capital.
That's right.
It's an exciting time to be following fintech.
Absolutely.
In this space. So this wraps up our discussion of the key sectors within the fintech landscape that are attracting that investment and driving innovation. But it's important to remember that these sectors aren't isolated silos.
No, they're not.
They often overlap and intersect.
They do.
Creating this dynamic and interconnected fintech ecosystem.
It's all connected.
It's a complex web of innovation.
It is.
With each sector influencing and shaping the others.
That's what makes it so fascinating to follow.
Yeah.
But let's zoom out.
Okay.
And consider the broader implications of these trends for the future of the financial services industry.
The future of finance. What's the big picture?
Yeah.
How is fintech reshaping the financial world as we know it?
Fintech is transforming the financial services industry.
Yeah.
It's challenging those traditional business models. Creating new opportunities.
For innovation and growth.
That's right.
It's shaking things up. Disrupting the status quo.
That's right.
Forcing those traditional players to adapt.
Or die.
Or get left behind.
Exactly.
But this transformation is not without its challenges.
Of course, not every transformation has challenges.
And one of the biggest facing the industry is regulation.
Regulation is a big one.
Governments all over the world are grappling with how to regulate this rapidly evolving industry.
So tricky.
Trying to balance that need to protect consumers and ensure financial stability. With that desire to foster innovation and competition.
Yeah, that's right. It's a tough balancing act.
It's a delicate balancing act.
Yes, it is.
So regulation is a critical issue. For those fintech companies, that regulatory landscape is constantly evolving. So companies have to be agile and adaptable.
They have to be.
To navigate this complex environment.
Absolutely.
And those fintech companies often operate across multiple jurisdictions.
Yeah, they do.
Which adds another layer of complexity.
It does.
To regulatory compliance.
A lot to keep up with.
It's a constant game of catch-up.
It is.
For both fintech companies. And regulators.
Then the regulators.
That technology is evolving so quickly.
Very rapidly.
It's hard for those rules and regulations to keep pace.
But
despite all those challenges, regulation is essential.
Absolutely.
To ensure the long-term sustainability.
Yes. And trust.
Trust is key.
In the fintech industry.
Those consumers and businesses need to have confidence that their money is safe.
Safe and sound.
And that those companies are operating responsibly.
So
regulation is about creating a level playing field.
It is.
And ensuring fairness and transparency.
For everyone.
For everyone involved.
Exactly.
So regulation is all about finding that sweet spot.
The sweet spot.
Protecting those consumers.
Yes.
And fostering innovation.
Yeah.
But another major challenge.
Okay, what's that?
Facing the fintech industry. Is competition.
Competition is heating up.
That fintech landscape is getting crowded.
It's getting crowded.
With new players entering the market all the time. It's a jungle out there. So we're seeing intense rivalry.
Yeah, intense rivalry.
Among those fintech companies.
The fintech companies battling it out.
And between those fintech companies and those traditional financial institutions.
Yeah, the old guard is fighting back.
And those newcomers are hungry to disrupt. So this competition is driving innovation.
It is.
Pushing those companies.
To develop
those better, more affordable products and services.
And it's a win for consumers because they get more choices.
More choices and better value.
So it's like survival of the fittest.
It is.
Only the strongest and most innovative companies will thrive.
That's right.
In this competitive environment.
Yeah, you got to be able to adapt.
It's a tough business.
It is.
But it's exciting to watch.
Absolutely.
But competition is ultimately a good thing.
It is.
For consumers and businesses.
Right.
It forces those companies to raise their game. And deliver more value. It's like that old saying.
What's that?
A rising tide lifts all boats.
A rising tide lifts all boats.
I like that.
Right. Competition drives innovation.
It does.
Which benefits everyone.
But
let's shift our focus now.
Okay.
From those challenges facing the industry to the opportunities it presents.
Opportunity.
Fintech has the potential.
It has so much potential.
To revolutionize the way we live.
Yeah.
The way we work. The way we interact with the financial world.
Absolutely.
What are some of the most exciting opportunities?
Okay, what am I excited about?
That you see on the horizon.
Right.
What's got you fired up
Okay.
about the future of fintech?
Well, one of the most promising areas is financial inclusion.
Financial inclusion.
We touched on this earlier. Fintech companies are developing those solutions that can reach billions of people around the world who are currently unbanked or underbanked, giving them access to those financial services for the very first time.
Think about the impact.
That
could have people who were once excluded.
Completely excluded.
From that financial system. Can now save, invest, and build a better future. For themselves and their families.
It's an amazing thing.
It's bringing those financial services to the unbanked.
The
underbanked population.
The underbanked.
Around the world. Those who have been left out
of the system.
And that has the power to lift people out of poverty.
Absolutely.
Empower them to build those businesses.
Yeah.
And create a more equitable society.
More equitable for everyone.
It's truly an inspiring vision.
It is.
It's not just about providing access.
No, it's not.
To those basic financial services.
Right.
Fintech companies are also developing those solutions.
They are.
That can help people save for the future.
Yeah.
Invest in their education.
And
protect themselves.
Right.
Against those financial shocks.
Those unexpected events.
So they're giving people the tools they need to build that more secure and prosperous future.
A more secure future.
For themselves and their families.
That's what it's all about.
It's amazing to think about how much potential there is in this industry, not just for profit, but for positive change.
Absolutely. And that's something I think gets lost sometimes in all the talk about disruption and valuations.
Yeah.
Fintech isn't just about making money.
Right.
It's about making a difference. It's about using technology to create a more inclusive and equitable financial system for everyone.
Yeah. And I think that message really resonates with a lot of people.
Yeah.
Especially those who are drawn to the fintech space.
I agree.
There's a real sense of purpose and mission that drives a lot of this innovation.
It's attracting some of the brightest minds from all sorts of backgrounds.
Right.
Tech, finance, design, social impact.
All coming together.
To
solve some of the world's toughest challenges.
Yeah, it's really inspiring.
It's a melting pot of talent and ideas. And that's what makes it so exciting.
Absolutely.
But we've been talking a lot about the future of fintech.
We have.
And it's easy to get caught up.
Yeah.
In all the possibilities. But the future isn't something that just happens to us.
No, it's not.
It's something we create.
We create it.
And that's where you come in.
That's right, the listener.
We've given you a taste.
A little taste.
Of what's happening in the world of fintech.
What are you going to do with this knowledge? How are you going to apply it? To your own life.
To your life, your career, your investments.
The possibilities are endless.
Endless.
Maybe you'll invest in a fintech startup.
Yeah.
Maybe you'll switch careers. And join a company that's changing the world. Maybe you'll use this knowledge to make smarter financial decisions.
In your own life.
It's all about taking action. However big or small.
That's right. The future of fintech isn't happening somewhere else.
It's happening now.
It's happening right here.
Right here.
Right now.
Right now.
And you have the power to be a part of it.
You do.
That's it for our deep dive into the fintech trends of 2024.
It is.
We hope you found it insightful, inspiring.
And maybe even a little challenging.
Remember, the future of finance is being written right now.
As we speak.
And you have a role to play.
You do.
In shaping that future.
Until next time.
Happy exploring.